this sector. Now, what is entailed in this bill? The larger committee we had, the leadership, which was addressed by the CS, appointed a 17-member committee that was picked from various regions, from Mombasa, Central, Mount Kenya, Nairobi, Rift Valley. We sat here the whole of last week to look at the two proposals, the proposal from the Committee of Experts and the bill that was presented by the Leader of Majority in Parliament. We took a week to go through them and harmonize them and give a proposal. The deadline is tomorrow to the Committee of Parliament for considerations. So we had support from Sasra, we had support from the ministry, we had very good experts, we had all the NACOs presented, including Cusco. We had good people. We divorced ourselves from our institutions and looked at it from above and said, how do we want the SACCOs to look like in the next? The members should not go empty-handed. They should get something from their savings. The banks have the Kenya Deposit Guarantee Fund for their members. So the movement which sat here 2 weeks ago said, we have become mature, we are big enough. We can also have a SACCO Deposit Guarantee what? Guarantee Fund. That can be developed and supervised by our regulator. Our regulator should be empowered to supervise that fund so that in the event, so we went further to ask ourselves, the fact that we shall be having a deposit guarantee fund does not give you powers to go and misuse the money that has been given to you so that you can go and claim the money from where? From that insurance. No. We want to prevent and detect early that the leadership of SACCO X is leading to the wrong direction. We capture you early and prevent the SACCO from falling. It should take us 15, 20 years before we hear that a SACCO has done what? Has fallen. So we will give more powers and support our regulator so that we can be able to prevent another SACCO falling. Prevention is better than what? Cure. So that fund there should stay there for 20 years without having somebody to do what? Putting a claim on it. So it's a good thing. Deposit Guarantee Fund is an insurance what? Function for our what? Our deposit and our members. So it's supported, and we have given that kind of support in our recommendations. Number two, and lastly, it has also introduced what we call as what? Central liquidity and shared services. These are two things, shared services and central liquidity. Central liquidity is for our own good. We can be able to create an environment, a platform upon which the SACCOs can borrow money from each other. We can do clearing amongst ourselves so that the banks have their own clearing house. We cannot go there to do our clearing. We want to develop our own and say, how can we come together and create a platform through which we can be able to do inter-SACCO lending, so that we can be able to support each other in terms of liquidity. And also actualize a situation whereby technology is taking us somewhere. Our children will not come to do the traditional SACCO banking business we are doing. We are digitalizing. We are moving ahead. And we said, and we have recommended, it has been recommended, that there shall be at least 3 to 4 shared services available. We have institutions that you can choose to belong to. We start with 3 or 4 shared services regulated and given license by our regulator to ensure that the reporting, the standards, the manner in which we are doing our bookkeeping is in order, so that even when they are doing regulations, it becomes easier to get the data and the information to detect early. So we will be able to say there will be at least 3 to 4 maximum shared services that all of us can belong to, so that instead of you going to invest 50 200 million to buy a technology platform, it should be there, owned by yourselves and shared amongst yourselves as a service. So I want to comfort, I don't want to take more time, to say that all these reforms that are coming is for the good of the movement, is for our prosperity, is for to create comfort and confidence amongst our members. Once again, thank you very much indeed. I've just taken about 2.5 minutes, and may God bless you for listening to me. Thank you.
Yeah, thank you very much, Bwana Marube, for introducing us to another time zone, where indeed 3 minutes could actually be about 15 minutes. But I trust that you have canvassed the agenda pretty well as we align to the transformation agenda that we are in. Before I quickly move on to my remarks, and as we prepare to welcome our chair, may I ask with all humility, Director Cooperatives Nakuru County, or a representative, are you in the house? Sorry? Okay. She's on the way, but I think we take note that we are aptly welcomed to the county of Nakuru, and at an appropriate time, we'll have her make her remarks. So ladies and gentlemen, allow me to briefly give you a snapshot of where we stand as pertains what you really represent. Allow me to welcome you all to this inaugural regulatory roundtable for the non-withdrawable deposit-taking SACCOs. Indeed, it's been over 5 years since this segment was brought into the regulatory umbrella to undertake specified non-withdrawable deposit-taking SACCO business. As we progress, perhaps a point of reflection, given that we did commence implementation of our regulatory oversight responsibility over the deposit-taking SACCOs about 15 years ago, we were able to have certain points of learning. And indeed, what I want to assure you is that the regulatory framework that supports oversight over non-withdrawable deposit-taking SACCOs is a much more robust, much more enhanced regulatory framework. And I say this having learned from the lessons that we have seen at the point of regulation of deposit-taking SACCOs, that now with the non-withdrawable deposit-taking SACCOs, we have enhanced that regime to not only include prudential metrics, but enhanced it to incorporate non-withdrawable metrics, particularly on matters market conduct and consumer protection. And when we talk about non-withdrawable deposit-taking SACCO, specified at that, we have 3 categories. We have first, in terms of deposit quantum, where any SACCO that has 100 million shillings in the form of non-withdrawable deposit-taking business deposits then comes into the regulatory ambit of Sasra. Secondly, we have SACCOs whose members are within the diaspora community, as we call them, diaspora SACCOs. As we speak, we have 3 of them, and as we did have our introductions yesterday, the name Kenya-US Diaspora came into being, Granite Diaspora. So these are SACCOs that draw their membership from without our borders. And finally, we have SACCOs that are operating purely within digital channels. As we speak, we have one SACCO that is authorized to operate within that level of specification. Our chief guest allow me to get a bit more granular. That when we began the year, we have a total quantum of 357 regulated SACCOs controlling about 1.2 trillion shillings in assets. Ourselves as non-withdrawable deposit-taking SACCOs, number 178. So in terms of raw numbers, we are representative of 49% of those numbers. And when we look at the 178 SACCOs, they have 7 branches. So in terms of service points, then we have a total of 185 service points. In terms of membership, as we speak, the membership of non-withdrawable deposit-taking SACCOs stands at roughly about 520,000. So that is approximately 7% of the 7.3, 7.4 odd million members that are within the regulatory fold. When we speak about the key metrics, in terms of the representation of the total assets, total loans that non-withdrawable deposit-taking SACCOs hold in comparison to the industry, we have a systematic trend of about 9 to 10% across the metrics that I've mentioned. But I want to introduce a very interesting observation that whereas these metrics move from between 9 to 10%, when we look at the contribution of non-withdrawable deposit-taking SACCOs to the total deposits within this industry, dear cooperators, you control 12% of those deposits in comparison to the 9 or 10% that you provide in terms of metrics across the other pointers. Therefore, what does that signal? Cooperators, we have significant deposit mobilization potential. That whereas the term non-withdrawable deposit-taking SACCOs may be used, it is clear that there is significant deposit mobilization potential. Let me move to the geographical spread. So out of the 178 deposit-taking SACCOs, Nairobi County accounts for close to 70% of these numbers, which translates to about 123. And of course, you can then understand why. Because most deposit-taking SACCOs, non-withdrawable deposit-taking SACCOs, are actually employer-based. The heartland of this country is within the capital city, where most employers have their head offices. And so that spread sort of can be understood by virtue of the fact that most employers are actually domiciled within Nairobi. So that's 70% in Nairobi. Kiambu County accounts for about 10.5% of these numbers, which translate to 19 of them, and thereafter Mombasa. And I think as we were able to have the introductions done, you were able to see Nairobi, thereafter Kiambu, and thereafter, of course, after Kiambu, then we were able to have a look at Mombasa. In total, we have representation of non-withdrawable deposit-taking SACCOs in 19 of the 47 counties. This translates to about 40%. That does not in itself mean that we do not have members spread across the country. And with the integrations that we have with mobile network operators, financial service providers, what we would wish then to confirm is that there is wide geographical reach. I then move on to the contribution of yourselves to the key economic sectors that we map. Again, this is an interesting metric because over the years you've been able to mobilize about 73 million in 2023, down to about 66 billion, sorry, the figure is billions, across the 8 economic sectors. But consistent with the macro level analysis, a chunk of our credit, chief guest, board members, cooperators, a chunk of this credit goes to land and housing. But away from the trends that we see in aggregate, after land and housing, we move on to MSMEs in terms of trade, and thereafter finance and investment. So what that shows is that our members adopt the hustler mentality that whereas they are in employment, they're actually employers to the extent that they support MSMEs. Interestingly, human health being one of the key sectors that we assess, is actually last at about 1%. Again, reflective of the fact that a chunk of our members are actually employed, and on that basis could have, in one way or another, some level of cover, medical cover. Another area of discussion has a lot to do with a movement from non-withdrawable deposit-taking SACCOs, chief guest, to deposit-taking SACCOs. Aggregated over the 5 years that we've been observing and monitoring the trends, there has been consistent year-on-year growth of about 9%. That is despite the fact that over the 5 years, we have had 4 non-withdrawable deposit-taking SACCOs transit to the deposit-taking SACCO segment. And as we look ahead, I think within the course of this year, perhaps in the next 2 years or so, we are also alive to the fact that some of you may desire to transit. The transitions we've seen are of about 5 non-withdrawable deposit-taking SACCOs that controlled 22 billion in terms of assets. But albeit that transition, chief guest, I want to confirm that the stability metrics have been maintained and the movements have been positive. Chief guest, sir, this roundtable is also aligned with our journey of automation, where during the first day of the RRT, that was yesterday, we were able to take our regulatees, our partners, through a risk-based supervision system, where we intend to fully automate not only our corporate processes, but also our regulatory reporting, and enhance the extent to which we can have early warning indicators of likelihood of movements within the performance of the SACCO. Lastly, chief guest, chairman, and members, I invite all participants to this interactive session to learn new skills and experiences in the management of SACCOs. Allow me, therefore, at this juncture, kindly, to invite the authority's chairperson, His Excellency CPA, Honorable Jack Ranguma, to make his remarks and progress to the next phase of this program. Asanteni sana and karibu sana, Chairman.
Hello. I will have to bend. Innovation is there always. The principal secretary representing our chief guest of today, the cabinet secretary for the Ministry of Cooperatives and MSME Development, the members of the board of directors of Sasra present here, and I've seen them, I will introduce them to you, management as well as Sasra staff, county cooperative directors present today from Nakuru, Nairobi, Mombasa, county cooperative officers present, chairpersons and members of boards of directors and of SACCOs, boards of directors of SACCOs, chief executive officers of SACCOs, distinguished cooperative leaders present. I am here to welcome you. And please forgive me when I appears. for being a little drowsy because I take some medicines to ensure that the pain goes down a little. And I believe you will all forgive me. I see a big number here today. I want to try to project my voice so that it can be representative of that of a politician speaking on top of a vehicle. Allow me to introduce members of Sasra board present here. If you would kindly stand up so that the chief guest will see you. I have Methuselah Rono on my far right. Karibu Bwana Rono. I have Freda Mora in the center. And I have George Maina right here next to me. These are independent directors of the board. We have other directors, one that you know, in the name of the Commission of Cooperatives, representing the PS in our board. I'm sure the PS has an explanation of where he is. We also have a representative of the governor of the Central Bank of Kenya, Cynthia Lekolol, who is not with us today, but I do believe that at one point in time, today or tomorrow, she will be present to be able to engage with you as we progress. Bwana Principal Secretary, on behalf of the Board of Directors and Management and staff of SACCO Society's Regulatory Authority, I want to take this opportunity to welcome you and to welcome all our guests to this maiden regulatory roundtable for specified non-withdrawable deposit-taking SACCOs. Allow me also, Bwana PS, to extend our appreciation to the directors of cooperative development present here, those that I saluted. I believe that we are expecting one from Nakuru. There is one from Nairobi and another one from Mombasa. And to the representatives of the esteemed sister regulators present here, if they have identified themselves. I don't know if they have arrived today, the sister regulators. I know the commissioner is a regulator, one of them. Any other? Okay. We are also honored to have chairpersons, board members, and chief executive officers of specified non-withdrawable deposit-taking SACCOs who have found time to be with us today. You know you are 178. I understand even though the hall actually looks full, but I understand that you are just about 91, you said? 91 of the 178. This is still a big number, but we must be able as a regulator to reach all of you because there are things that we must tell you and the things that we want to share with you as we progress to the future. You may be wondering why this roundtable, and why now? The SACCO Society specified non-withdrawable deposit-taking SACCOs, NWDTs, were gazetted in the year 2020, heralding now 5 years of regulatory oversight over that period. This roundtable, therefore, accords an opportunity to assess the progress made while appreciating the challenges that you have gone through, and of course aligning you to the way forward that has, in terms of policy direction, that have been pronounced by the Ministry of Cooperative Development. In addition to this workshop comes a pivotal time when significant reforms are on course to not only stabilize the SACCO industry, but redress market infrastructural gaps that have existed in the past. And of course, I know my brother Marube and the CEO addressed some of the challenges, the issues that are being introduced in the sector. And I know you also know that there is a bill that has been proposed by the committee of experts to ensure that people are aligned. The NWDT segment now comprises 178 SACCOs, as I had indicated. By December 2025. They hold assets of about 140 billion and deposits of about 104 billion. That I think the CEO addressed. Whereas these numbers reflect steady growth across all pointers, we note that there still exists a few small SACCOs that may not have the economies of scale to invest in appropriate technology and systems that will widen the reach and diversify product and service offerings while maintaining compliance requirements. And this, I think, has been explained in the new bill by way of shared services as well. Now, the authority has therefore proposed a number of strategic stakeholder engagements, including this very roundtable as the first one, to facilitate effective adoption of those regulatory standards that we hope to be approved, will be approved, to ensure that we are aligned in a direction that is important for the growth of this sector. And I will tell you a number of them. One is the risk-based supervision. This, I am sure you know, the authority will keep deploying effective risk-based supervision as a fundamental aspect of our oversight responsibility. And risk-based supervision is very important. You will be in a mirror. The CEO and his team will be in a position to see you while on their desks, to identify those things that are not consistent with the standards that we will have introduced to be implemented. And based on that, what they will see as a dashboard will identify those things that, those people that we must visit more frequently to ensure that they comply with our standards. We also intend to leverage on technology to be able to do this. That's why the whole of yesterday you were introduced to RBSS at the SACCO level for improved transparency and accountability, while also increasing efficiency. But we also do expect you to deploy those technologies that will help you to communicate with what we will have introduced as Sasra. The policy, legal, and regulatory reforms are also in the way, including proposed amendments to the SACCO Societies Act to deal with both regulatory and structural gaps that have over time delayed operationalization of a deposit insurance mechanism, which you have had being referred to as DGF, Deposit Guarantee Fund. We have also talked about liquidity management and shared services, as well as enhanced corporate governance standards. The other thing that I wanted to to highlight is the capacity building and guidance. We recognize that regulatory changes are only effective as the sector's capacity to implement them. And we want to believe that you will align to ensure that you develop the human, or you put in place the human capital required of you to implement those things that we are proposing as a regulator. Our authority will continue to constructively engage with you on a continuous and structural basis to ensure that those things that we will have introduced are implemented. On a principal secretary and all guests present, I am happy to inform you that this roundtable is designed to be a working session to set the stage for improved compliance that will serve to improve stability of the industry as well as enhance its standing as an unstable player within the financial system. In fact, the best way to put it is 1 shilling in a SACCO is equal to 1 shilling in a bank. That's where the direction we want you to go, because if that is sustained, then as an industry, will be seen as being efficient, will be seen as being reputable and a stable player in the sector, and will then protect members' deposits. It is now my honor, Bwana PS, to invite you to deliver your remarks and those of the Honorable Cabinet Secretary, and to officially open this roundtable meeting, the first one of a kind. Karibu.
Thank you very much. I'm Tony, the director of Nakuru County. Ako amefika. Director Nakuru County. Kuna pia all the directors who are here, by the way, please come up here. You know the cooperative law is exercised through the Commission of Cooperatives, who exercise it also through the directors of cooperative. Let me ask the director of Mombasa, first Nakuru to welcome us, and then Nyoro to say a word. Ameniambia hata amekuja na boss wake. Please, boss.
Thank you, PS, the chairman and the board, Sasra, all the invited guests, our distinguished leaders and CEOs of cooperatives. Hamujambo? Hamujambo? Karibuni sana katika jimbo letu la Nakuru. Apologies, we are a bit late. We had a partners meeting in the morning, which took longer than we had earlier anticipated. But we are glad to be here. We are glad to join you. We are glad to join the discussions, and we continually offer our support at the county level to ensure that your cooperatives are well run, they are well managed, and you deliver value for the members who are members of your respective cooperatives. So karibuni sana, and it's a pleasure to be here. Asante.
Asante sana, our chief guest, our good friend, the PS, Patrick Remy. I know the protocols. Hamjambo. PS, allow me with the salutation to be satisfied, because I'll have my session in the afternoon. Thank you very much for according me an opportunity to say hi early in the day. Asante.
Thank you so much, our peers and team from various SACCOs. Good morning. My name is Kibet Kurgat, Chief Officer in charge of Cooperatives and Entrepreneurship, Nakuru County. We welcome you to Nakuru County on behalf of Her Excellency Madam Susan Keika. You are highly welcome to Nakuru, Naivasha. And PS, we are really humbled because you always come to Nakuru. Juzi tumekuwa naye maneno ya kahawa hapa tu na tukiwa na CS Oparanya. Leo huko hapa maneno ya Sasra. Kesho pia tunakukaribisha. Usichoke kufika hapa nyumbani. Mnakaribisha PS hapa kwetu. Tunashukuru sana PS. Continue coming to Nakuru. As a CEO for cooperative, we are strengthening all the cooperative within Nakuru County. Currently, non-withdrawable deposit taking SACCOs, we have around 5 in Nakuru. We have Kabarak, we have Panda, we have 3N, we have ACK, Imani Talent, and also there are around 5 only. But I think this roundtable will be fruitful to all of us. I think what your reservation as SACCOs, you give us your feedback. Also, the Sasra team will give us what they expect from us. Then we come up with the regulations and then we adopt those resolutions. So on behalf of Her Excellency Madam Susan, we highly welcome you all the team to come to Nakuru every day, every time. Karibu sana Nakuru na atubagui, tunakaribisha wageni wote. So feel free. Mimi naitwa Kurgat, si wenyu wa cooperative hapa Nakuru. Karibu sana. Thank you PS.
So the chairman of Sasra, Your Excellency, the former governor of the great county of Kisumu, amenikumbusha, and also the incoming. The board of Sasra, CEO, colleagues from Sasra, na viongozi wote who are here. Good morning. You know why I invited those my colleagues from the county? If you read the constitution, the one Marube reference to, when I think the drafters, when they reach the part for cooperatives, they were either tired or something happened. They said, in fact, it's the shortest. Cooperatives is devolved. So they did not specify, and one of the biggest input of the amendment we are doing the cooperative bill is to do what is called delineation of functions. Now, your account they have their own CAK, it's called Council of Governors. If you touch anything that is devolved without the Council of Governors, wanakuambianga see you in court. So we recognize you, our colleagues from the counties. I think, as we say, we serve the same people, and we really look forward. The other important aspect I want, while you are speaking about regulation, is a big portion of our SACCOs are not regulated. The regulators are the county directors of cooperatives. So it is good, chief officers, how regulation is done, because Sasra is leading the way matters regulation, SACCOs. And then we ask ourselves, if we are saying a shilling in a bank should be as safe as a shilling in a SACCO, what about those small SACCOs in the village which don't make the threshold to be here where we are today? And it's a big challenge. It's a big challenge, really. And we are asking, even within the framework of Sasra, how can we have anybody who is operating a savings and credit cooperative be regulated? That is the next frontier. But you know, in this space, you must pick your battles wisely. I think we already have quite a bit in our hands. And also, we must leave something for the people who come after us. You want Marube's prayers. And we appreciate, any good wish towards you is appreciable. But we appreciate the constitutional democracy we have in this country, and we respect that the people of Kenya ultimately have a say on who governs them and how they'll be governed. We who are serving in the fifth administration of William Samoei Ruto, what he tells us, he wants to transform this country, and he has asked us, me have been tasked to lead the transformation of the cooperative sector. And I was checking my performance. Sometimes performance can be measured by how people look at you. And I saw many people looking at me very badly the other day. And I thought they are looking at you badly because there's something which you are doing right. In fact, if you want people to love you, do nothing. Make no decision. Rat or no snake, you'll be the most popular principal secretary ever to have served this state department. But as the president has told us, doing nothing is not an option. So we have tried. We have tried to do things which are meant, we thought they have waited for so long to be done. So now let me first speak as a PS, then I speak as a CS. And I'll try not to repeat myself because if I lie, I will lie to you if I tell you I've not looked at this thing. I looked and it is well written. But we have tried to do some things. Yesterday, I had a meeting with KMA SACCO, and they are struggling with the delegate system. So I asked them, how many members do you have? They told me they have 7,000. 7. So I asked them, so if you have an NGM, and I want you people with calculators to open them. If you have an NGM and you say for fair meeting, you say 10% of the members contribute. How many members are going to contribute? And we said, so that somebody can express himself properly, we said we give each and every person 5 minutes. Fair enough? How many minutes will you require for that meeting to end? How many minutes? How many minutes in an hour? How many hours? How many hours? How many hours in a day? So we sent for a SACCO with 7,000 members. Let us have an NGM which takes 5 days. They are yet to respond to me because that is what it means. And now you understand why the commission in its wisdom ask all cooperatives with 5,000 members and above to zone and delegate. And we said, because those of you who have interacted with me, I've always said that my father was a primary school teacher, but he belonged to Meru Malim SACCO. The annual general meeting of Meru Malim SACCO was such an important event in his calendar that he could wear his favorite suit, go to the AGM, get whatever allowance they are getting, and then they will go and talk politics at a popular place in Meruton called Continental Hotel. Those who know Meruton know Continental Hotel. We are saying you can continue having your annual meeting. You can call it members education meeting, members what, you can call it whatever you want to call it, so that you don't deny members the opportunity to do things they in fact are part and parcel. But the meeting where you are going to get important decisions which have been in an annual general meeting, borrowing powers, important decisions. Let us have a key organ called the delegates making those decisions. So we are not telling you to call your members, but we're just telling you that we have a decision-making organ that can sit and deliberate things like civilized people. 9 number, maybe 11, but you can still have your members every year and tell them what you are doing. And I thought that blend can help us move forward. We also talked about how we invest our money, how we bank our excess liquidity. This week, I had some individual come to the office and told me they saw an opportunity, huge opportunity, in a gender-based, and I'm trying to avoid the back because I don't want to be told see you in court, in a gender-based institution to develop a product that the SACCO was going to be a main shareholder, and that development, that particular product requires 2 billion. And in fact, the chairman of the SACCO called the CEO for an urgent meeting, and that decision needed to be made within 24 hours. 2 billion, the decision needs to be made within 24 hours. And the CEO objected. It said, such a huge decision cannot be made in a rush. And number two, there are guidelines on now we need to invest excess liquidity. Within 48 hours, the board was convened, and the sole agenda of that board meeting was to discuss the performance of the CEO. You know, I'm not talking about utopia, I'm talking about Kenya. My friend, when we talk about regulation, when we talk about a regulator, is that you're not in the business of collecting maize and not selling it. In the business of collecting people's money. And we know with money comes temptations. And more so, I ask, the biggest SACCO year today is around almost 4 billion. That's a lot of money. The lease is around 100 million. And the power to collect that money is derived from the CAP 490 and from the Sasra Act of 2008. This is a government public management instrument. But our people, they don't want the government to ask, when you have exercised these powers to collect the money, how are you using the money? We want the biggest challenge we have is these decisions, these instruments. We want to invest outside the regulation framework. And that is why the Commissioner again issued the circular and said, even where you invest excess liquidity, it must be within a regulated framework. We know the central bank is doing extremely very well in that space, and that is the indicator we give. There is no resource from the SACCO ecosystem that is go. You know, you are regulated here under Sasra. Here, regulated under Sasra. Then you go and put your money in an institution which is not within the regulation space. Then you question, who is not okay? And that's why we are discouraging. We said key decisions must be approved in an NDM, in an NGM. And if you want to invest with things like land, Sasra, you have to know. Because you also know land is not regulated. You buy land at a price of 2092. As people give you, if you're our asset base is 1 billion. Members deposit here. Retain earning, core capital, know the nice names. Then you hear a big gap. Then you say, hey, this is now must be assets. Where are these assets? You know some assets are visible. Eh? Hata wengine wamenunua mashamba huko na manga hata imepita Tanzania. Watu wangu. So we say those decisions, let somebody else have a look. The other decision we see quite challenging is systems. And you must appreciate that we live in a society that is really evolving. Now everybody is talking about AI. But 30% of our SACCOs, 30% of our SACCOs are within that members. And as a system guy, I decided to do what they call haircut. I decided to remove 100,000 from you. No, they will not remove 100, they remove an odd number, like 97, from 100,000 members. How much money is that? Will you ever know? And the systems are ghost-like. You'll never be notified. Your system will never be notified. I was telling, we recommend, as much as we trust in the systems, there's no replacement for proper reconciliation of our members' accounts. And then we spoke about our auditors. How our auditors, even, the auditors are supposed to add value. But it's unfortunate that when you see auditors, we shake. But auditors are supposed to come and add value. At the end of the day, they tell you, if you do this and this, these are the risk-based areas you need to improve. But our auditors come, they are flexible. I saw in America clothes which you wear when you are 10 years, 15, they grow with you. The auditors now, their report can fit whatever circumstances you are in. And guide me. Then and the young people who are working with us because of the system are very, very intelligent. You have one of creative accounting. No verification of the loan book. Unaambiwa loan book, they know what you look at. Unasema members wamechukua loan hapa 2.5, 3 billion. Alafu imematch deposit. Even if they withdraw the money, si utaambiwa ilienda kwa loan. You don't verify. How are we doing around it? We ask Sasra to look at the caliber of our auditors. If you are auditing an heavyweight, you must be an heavyweight auditor. If you are auditing a tier 1 SACCO, you must be a tier 1. So that it's credibility. We can know, other than what Sasra is able to do before they give you an approval. We also know it is that a second or even that step they're taking. Because sometimes actually the lenders have no idea. I have called SACCOs. A bank has called, say we have this money, it has happened. Then I call the chairman, the CEO. We are all surprised together that 50 million can be withdrawn from a SACCO and nobody can know. My challenge to you is that let us remember reconciliation. If you earned 10 shillings in the morning, you have gone and spent 12 shillings in the whole day. In the evening, you expect to have 5. 10, 5, 5. If you don't have 5, something has happened. Reconciliation. Let us invest in controls that ensure that just because you have a system, you use the system, then you use the same system to do reconciliation, then you are in a zero-sum game. You will never know when it is night or when it is day, until the day you have no money in the bank, but the system is showing you have billions in the bank. Last week in Mombasa with the ACOSCA, with the WOKU board, and many of you know we are trying to host the World Council of Credit Unions conference in 2028. And when I look at the people who come from countries which are mature matters, SACCOs, you see a clear demarcation of the roles of the board and the roles of the CEOs. And we must confess, we must agree that we have a challenge how we manage the contract of our CEOs, or our chairman, the people may won't perceive their roles in our SACCOs. We have chairmen who wake up every single morning to go to their SACCOs, who vet the day-to-day operations of their SACCOs. And not even chairman, even all the directors. In fact, they have C-suites in their SACCOs. But when you go to America, the CEOs, as the chief technical officers, are given the leeway to make decisions. In fact, you saw the show yesterday or the other day on Citizen. Bill Cheney is the CEO of School First. CEO, he's not the chairman. You ask yourself how many years? 15, 20 years. Because the board owns him accountable on his performance. He owns him accountable on the growth of their SACCOs. The scientific, objective-based performance management systems. Lakini hapa, every single procurement, the chairman must approve, or the board must approve. Every single employment. Then you ask, where is the competency? And I do interact with many CEOs, many SACCO officers. And you ask simple question, you see, no, this person is one thing. I even challenged the chairman of Sasra. I said, because we are expanding Sasra, we said we want to poach the best brains in this country. We want to compete with Central Bank, with the caliber of employees who will be working for Sasra. And we want also to pay them the same dollar as top institutions are paying. So that when you come to Sasra, your mind is focused, you know you are sorted, your career progression is clear, and the ethos of meritocracy are deep-rooted. And we see the same about our SACCOs. Where is the professionalism? Where is it that a CEO's performance contract is tied to the first time you say no to a bad decision? I don't know the proceeding to suspend that CEO. And there's the human aspect of these people who work for us, the CEOs, the CFOs. When you everyone sits and fires a CEO, those are career limiting, because everybody will ask who wants to fire this person. And now that you're talking about moving to approved persons regime, how can we trust even that regime if CEOs, CFOs are being tossed right, left, or center just because they are making the right decision? My appeal to you leaders who are here, chairman and members of the board, is that let us professionalize how we run the executive. Let us agree on how many board meetings we'll be having. Let us agree on how we'll be measuring the performance of our people. And let us agree on how the contract will be managed, so that it's professionalism. It's not that you have, every time there's an election of the board and a new chairman is elected, the next year what we see is a new CEO. And if you can train that, you'll see. Ukiuliza unasikia huyo mtu alikuwa yule chairman sana. And this is the problem of staying in one job for a long time. This is what we have been doing. And this is where we have lost a few friends. But if losing friends is what it will take to transform this sector, so be it. In the bill, we have also said, in the cooperative bill, you have said that you have structured how the cooperative movement will be like. CAK will be the apex body, and CAK will be owned by you. CAK will be resourced by the cooperative movement. CAK will be the voice of the cooperative movement in this country. CAK will be the vehicle to go and represent this country in international cooperative alliance all the way to higher law, all the way to the United Nations, where we sit as in the social solidarity sector of the United Nations. Then as a SACCO movement, you have your own COSCO. We are cleaning up the mess at COSCO. So SACCOs will have a union, will be a federation, national federation for all the value chains. Then when you come down to the counties, and this is where we need a lot of help from the county directors and the directors of cooperative, we are going to have unions, value chain based union at the county level, which will be coming up to Nairobi to relate to aggregate as a federation. And this is what the law has said. I thought it is clear that we are defining the responsibility of each and every organization, so that there's no confusion. Nowadays, I know you get a lot of invitations. Many people in this space who you don't know what they call you to do. We don't know what kind of training they are going to do to you. But we are saying, all the time I go to a meeting, I ask, where is Daniel? When I see Maruba, I know this meeting is halal. When I go to a meeting, I see Cusco, I know it's halal. I know this meeting is halal. When I go to a coffee meeting and then I don't see Nashu, I ask myself, what kind of meeting is this where the association is not being represented? I think the last thing we did very recently is we ask cooperative leaders to be accountable, more so matters international travel. We go to work meetings, we go to many meetings. You see same gentleman, same SACCO, same meetings. And we said, maybe we need you to tell your members where you are going, what you are going to do, and what benefits will that mean to the members if the members are paying. But if you are going for your personal things, nobody really cares. But as long as you're using other people's members' money, I think you need to be accountable, just like I am. The chairman here cannot go before the end of public service approved. The CEO cannot go, myself, I cannot go anywhere before saying where I'm going, who is paying for me, and how is that travel beneficial to our members. My appeal is to you, diversify. Let us encourage more young people to be exposed. Let us encourage more ladies to be exposed in this international travel. If you have gone somewhere 2-3 more times, let us encourage other people. Let us give this opportunity to fellow directors, give this opportunity to young people who are joining the movement to be exposed to the best practices we have in the world. Sasa niingie second half nisome speech ya Kinara. First, I bring you greetings from the team leader of the Ministry of Cooperatives, and MSME, Honorable Wycliffe Abeto Paranya, who want to attend another meeting in Mombasa, and he delegated this function to me. Amenituma na salamu, mmepokea? Let me tell you, we have a good team leader. Opalanya did not just embrace the philosophy of cooperatives. He has taken it to mashinani. 2 weeks ago, he called all leaders from Western Kenya. They want to form a big SACCO for Western Kenya. Because in Western Kenya now, the biggest SACCO is ING, which our minister is one of in that SACCO. But he wants to replicate the success to all the other counties in Western Kenya. Bwana Chairman Ranguma, please borrow a leaf. Let us revive the cooperative movement and more so the SACCO movement. In Kisumu, where you come from, I was in Kite the other time, in Siaya, Omambe and Migori, where we are not doing very well matters SACCOs. I'm delighted to join you today, this morning, for the very first edition of specified non-withdrawable deposit-taking SACCOs annual roundtable. Wanasihi hii mkutano iwe annual sasa, nesia tukuje, look at a more convenient time so that we have 100% attendance. It is unthinkable that the regulator can call you for a meeting and then you don't come for any reason whatsoever. You cannot imagine instead of calling for a meeting and there's no bank representative. It's unthinkable. It's 100%. It is like loyalty. My friend told me loyalty never comes at 99.9%. That 0.1% can be the one to cut you. Our regulators roundtable meeting is compulsory for every SACCO which is under your purview. Let me begin by commending the board and the management of the SACCO Society's Regulatory Authority for convening this important forum. It is both timely and necessary. It provides an opportunity for the specified non-withdrawable deposit-taking SACCOs to take stock of their compliance position and reflect on emerging policy and legal issues and propose practical solutions for strengthening this very important sector. In the past, civil engagement have largely focused on the big SACCOs, the deposit-taking SACCOs. Yet, operational challenges facing the SACCO sector do not exist in isolation. They cut across the regulated SACCO landscape in different forms and degrees. I therefore welcome the authority's deliberate decision to broaden its engagement and provide specified and withdrawable deposit-taking SACCOs, societies with a platform to contribute to sector reforms and discuss emerging issues and shape the direction of policy and regulation. The Ministry looks forward to the outcomes of this roundtable and wish to assure you that any practical and constructive proposals emerging from your deliberations that require policy attention or ministerial intervention will receive due consideration and actually a lot of support. As the Minister has consistently stated, cooperatives are private member-owned institutions. They must therefore take primary responsibility for their own governance, sustainability, and integrity. Government has, of course, an important oversight role, but the long-term success of the cooperative movement will depend on the discipline, accountability, and self-governance exercised within the institutions themselves. Cooperatives continue to play a critical role in the Kenya's social and economic development. Of course, they mobilize savings, expand access to affordable credit to many, many Kenyans. They support enterprise growth and advance financial inclusion for millions of Kenyans. And for this reason, the governance and stability of SACCOs is not a narrow institutional issue. It is a matter of public interest. It is my firm conviction that sound corporate governance is a foundation upon which member confidence is built. When governance is strong, members are more willing to save, invest, and participate. When governance is weak, safety of members' funds is put at risk, and public confidence in the sector is undermined. When the minister assumed office, it took time to examine the operational and regulatory environment of the SACCO subsector in order to better understand the challenges facing it. And it became very evident that the sector is confronted by a number of serious operational, legal, and regulatory gaps that require very decisive reforms. Beyond governance weakness, it became also clear that the SACCO ecosystems lack some of the essential institutional tools required to support end-to-end supervision, resilience, and orderly development of the sector. This, they included a deposit guarantee fund to provide protection for members in the likely event or a failure of a regulated SACCO, a central liquidity fund, a facility, and shared services framework to improve efficiency and strengthen sector-wide resilience and stabilization mechanism to support viable SACCOs facing temporary distress. When you talk about this, people pretend they don't know that they have seen the Central Bank of Kenya come through for certain institutions. And I like to use an example of my village mate, the late Ruben Marambei, who was sent by the central bank to go and rescue the National Bank of Kenya. And he did a good job. But when the central bank sent him, they did send him empty-handed. They gave him 1 billion to go and do what is called stabilization. You may agree, if Sasra is able to send someone to your SACCO with 1 billion shillings, when the indicators are you are viable and we can resuscitate you, we can do some miracle, that will be a good addition to the regulatory tools Sasra has. It is against this background that the minister appointed the committee of experts to undertake a deeper review of the SACCO sector and recommend appropriate reforms. The committee confirmed many of the concerns already evident in the sector. They included fragmented regulation, weak governance in part of the movement, insider lending, and even supervisory coverage, and regulatory perimeter that leaves many SACCOs and other financial cooperatives outside effective prudential oversight. The proposed SACCOs Amendment Bill 2026 is a government direct response to these challenges. It is intended to provide a stronger legal and institutional foundation for a safer and more accountable and even more inclusive SACCO sector. Among other things, the proposed reforms provide a pathway for the operationalization of the Deposit Guarantee Fund for SACCOs and the establishment of a framework for central liquidity support and shared services. Once established, the DGF will be a major pillar of stability in the SACCO subsector. It will enhance confidence among members by providing protection mechanism for deposit held in regulated SACCOs. Let me also address the issue of central liquidity and shared services, which at times have been misunderstood. This model is not about taking away the identity or autonomy of SACCOs. Let me repeat. This model is not about taking away the identity nor the autonomy of the SACCOs. Rather, it is about enabling SACCOs to cooperate more effectively in areas where shared infrastructure, common services, and pooled system can improve efficiency, reduce cost, and strengthen compliance. And this is one of the principles of cooperatives, cooperating within the cooperative ecosystem. It is actually anchored in the cooperative principle, cooperation among cooperatives, and through such framework, SACCOs can retain their unique identity and membership board while benefiting from common services such as management information system, information communication technology, the infrastructure, transaction platform, central liquidity management, settlement systems, and other shared operational tools. This approach will help the sector address the difficult balance between competition, efficiency, and compliance. It will also strengthen the ability of the regulator to supervise the institutions more effectively in an increasingly digital and interconnected environment. Fellow cooperators, while the SACCO Societies Regulating Authority currently regulates around 357 SACCOs, there are many more SACCOs and forms of financial institution cooperatives operating outside this prudential regulation. The regulatory gap must be addressed. It is not sustainable to have one part of the sector under rigorous prudential standards, while another part of the financial cooperative ecosystem remain outside the similar oversight, despite carrying significant risks to our members. And I know you have seen this week the stories going around about seal. Our housing and investment cooperatives. How do we bring them? Because they're also collecting money from our members. How do we ask them questions before going to buy land in Tanzania thinking it's Kenya? A shilling saved in a SACCO, unlike the chairman. Chairman, hii gospel umeshika. A shilling saved in the SACCO must enjoy the same regard and protection as a shilling saved in a smaller SACCO, the smallest in the village. Strengthening and expanding education across the board will therefore enhance fairness, build confidence, and promote a more stable and credible cooperative sector. I therefore challenge Sasra and all the stakeholders here today to begin thinking more boldly about how to progressively bring smaller SACCOs and other forms of financial cooperatives, including housing and investment, to cooperatives with financial risk exposure into more effective supervisory framework. I also want to commend the board and management of Sasra for the progress made in modernizing the supervision through the RBSS system, the risk-based supervision system. I'm aware that this system is intended to automate supervisory processes, improve the quality and timeliness of regulatory interactions, and strengthen the authority's capacity to identify, assess, and respond to emerging risks within the sector. To this, I want to say we are extremely excited about this system. I have been briefed that the project is now at the advanced stage and it has entered the rollout phase. I therefore urge all SACCOs present here to embrace this transition and expedite their onboarding. The future of effective supervision lies in timely data, digital integration, and responsive regulation. In fact, I've asked the CEO to think about its scalability. Can we look at the phase 2 of this system? How can we scale up now that we know we have a very good system? Now, I was being told the central bank, they want to go for capacity building at Sasra to see this system, because this system is receiving accolades across this country, maybe across the continent. It's a good thing because we intend to go where people have not gone. Now we are getting these accolades. But how can we stay ahead of the game? How can we scale up that challenges through to the CEO, the board, and the people working in ICT at Sasra? Today, as you participate in this roundtable, I want to highlight key issues that I expect each SACCO represent here to take back to its boardroom. Hapa sasa iko kitu. Ile watu wa mlima wanasema iko key. First, insider lending. Every SACCO must regularly review its related party exposures against its capital position and act early wherever risks are emerging. Bonds must not wait for regulatory enforcement where internal corrective action can and should be taken. Number 2 is governance fitness and institutional accountability. Supervisory committees must function effectively. Internal audit must operate independently. Candidate control committees must exercise objective judgment. These are not optional structures. These are essential safeguards for members' funds. Number 3 is data protection. The Data Protection Act applies to all our SACCOs. Member information must be handled lawfully, securely, and responsibly. Proper data governance, asset controls, and safeguards against breaches are mandatory obligations. The fourth item is compliance with anti-money laundering and counter-financing, anti-money laundering and financing of terrorism requirements. The KYCs, know your customer, transaction monitoring system. Reporting mechanism must work in practice and not merely exist on paper. Weakness in this area exposes individual institutions and wider financial systems to serious legal, reputational, and systematic risk. The fifth item is complaint handling and member education. An effective complaint management system is critical. It's a critical governance tool. It helps institutions detect product weakness, service breakdowns, and conduct risk before they escalate. At the same time, members must be properly informed about the terms, risk, and obligations attached to the product and the services they use. Number 6 is compliance with Unclaimed Financial Asset Act. This is a legal obligation. Every SACCO must identify unclaimed assets, maintain proper records, and ensure that the required reporting and transfer processes are undertaken in accordance with the law. The reforms before us are not simply about imposing tighter rules. They are also about unlocking new possibilities for the sector. A more stable and better governed SACCO ecosystem will create a pathway to stronger public confidence, lower compliance costs through shared services, and more credible integration into the broader Kenya financial system. These benefits will not come automatically. They will come through compliance, good governance, prudent leadership, and shared commitment to sector transformation. Before you leave this forum, I urge you all who are here to commit yourself to supporting the transformation agenda being spearheaded by the ministry. Review the work of the committee of experts and the proposed amendment, which is now before Parliament. Let me say, the SACCO movement remains one of the Kenya's greatest success stories in financial inclusion, grassroots enterprise, community-based wealth creation. But this success can only endure where institutions remain accountable, resilient, and worthy of the public trust. This roundtable, therefore, must not end as a discussion forum only. It must become a platform for action, reform, and renewed commitment to the stronger governance and better protection of member funds. With those very, very many remarks, it is now my pleasure to declare the first edition of specified non-withdrawable deposit-taking SACCO's annual roundtable meeting officially open. I thank you all.
Thank you, sir. Your comments were very welcome. And because we really integrate with you through the direction of CEO, about four members would want to say something when you are present. So I ask you, sir, in your presence.
I forgot something. You know, we normally interact when we meet in these meetings. We meet the other big SACCOs. They bully you. So I told the CEO and the chairman, I told them, today, I want to take directly maybe 4, maybe 5 questions from you people who are seated here. And I want you to be honest, and I want you to ask the most difficult questions. So that, to attend a number of rumors, I will tell you the position. You hear it. Let me become the host. You hear it from the horses?
Thank you, sir. Who will be the first to make comments? The lady to my left, then the gentleman with the specs at the center, and finally the 2 gentlemen from this end.
Good morning, everybody. My name is Florence Wanjiro Gaido from Kiatu SACCO, the chairperson, the supervisory. My question to the PS and to the members, to the Sasra, because it's an issue we've had, and even we visited your offices. It's concerning Cusco. Our SACCO, actually, it's among the small SACCOs the PS is talking about. But at some point, we put all our eggs in one basket. and we found ourselves investing our monies in Cusco. For the last 48 or 49 years of our existence, we've never failed to give our members something. Though we have had, we also are supposed to be prudent when we are giving them the dividends. But for last year, for the first time in our records, in our history, we had a very heated AGM this year because we didn't give our members anything. Reason why? We have